Right, what is going on, Generation Crypto? Thank you for tuning into this workshop. Today's workshop is going to be on setting up trading strategies on Conigy and Tradingview. I'm going to mainly cover some of the indicators we've done workshops on in the past, compound those into a strategy sheet so you guys can save it as a template, and from there I'm going to go ahead and take you guys through some of the templates I already have set up that I utilize. So we're going to get started. We're going to put like some moving averages on a blank chart, and then we're going to put an RSI on there, a stochastic, and a DMI, maybe like some unbalanced volume. I'm willing to take various indicators that you guys want to throw into the chat to help build up a strategy worksheet. And just to start guiding you guys into being able to build these more advanced strategies as opposed to just using one indicator and hopping to the next. If you guys look at my Conigy, I've actually got several things that are my favorites, and they all have different names. I even have some things that have gone obsolete that I haven't used in a while, right? So I've used some of these strategies for swing trading. Like the one we're looking at here is the even though it doesn't look like much, it's a 5-minute chart on BTC, but this is conducive when I have nothing to do all day except for swing trade, like the micro swings on BTC. It's actually been productive. In times of chop, this serves me well. I tend to stay away from it, especially since now we're trading bigger swings than chop. But then, I'm going to help you guys build these strategies, assign a time frame, and save them as your favorites. That way you can essentially just hop in and use them at any time. And they'll be accessible every time you log in. Thank you, Vasily. How's LA? Johnny, you should be able to VPN and watch YouTube. So I'm going to take questions. I guess this is private. If you guys want to ask me questions in Tales of the Crypto, I will answer those there. If you guys want to ask me questions on the YouTube chat, I'll answer those there as well. All right, moving on. I'm just going to go ahead and start with a really blank template. Absolutely nothing on it. And I want to wait till, I know there's 5 guys on YouTube. If you guys can essentially say here, let me know who all's on, so I have an idea who the audience is, because a lot of you guys have different edges than others, and I want to contribute to everybody in the chat. All right, we're up to 7 guys. Just go ahead and say hi, just so I know who all's in here. What's going on, Cypher, Miguel? Johnny, it doesn't matter. It's up to you. I've got all the screens up, so I'll be able to read questions from wherever they're coming in from. All right, so I'm going to get rid of the stochastic, and right now we're going to look at XBT. Let's go ahead and go to 4-hour charts and be like mainly conducive of what is going on. And let's start building out our strategy, right? First, we want to put some kind of momentum oscillator. You can go with the staple RSI, so we got your relative strength index, and we're going to put that there. And there's not even a volume here, so we could use a regular volume or unbalanced volume. One thing that I dislike about standard templates is the volume bars being on the bottom of the chart, because a lot of times they'll go up and touch the wicks, so I won't get a clear representation of what's going on. Another volume indicator is going to be the unbalanced volume by Lazy Bear. So if you guys type in OBV, you get the unbalanced volume and unbalanced volume oscillator, and that one is going to be like a net volume essentially, but it's not just green bars up and red bars up. It's going to be green bars up, and based on the net volume for that period, you're gonna see the negative as far, instead of red bars pointing up. So have a regular, again, add a regular volume and we'll take it off. So instead of having that typical volume up there where it's just red bars and green bars, I dislike it. I feel like it clutters my chart quite a bit. and I like sticking with something like the OBV. I'm gonna help you guys tailor your OBV so it looks more like mine. So we're gonna go into format, and we're going to just alter the style here. And instead of lines, I want histograms. The white line is going to be the on balance as far as like the net for that period. And the level is just going to be the 0. Now we could alter the length, but we're going to leave it standard as is. And now what we're seeing is these histogram bars that represent volume on the chart. And whenever we start seeing these downwards breaks, it's going to be sell-offs. But during this time frame, there was, so from here, through here, right, even though the price didn't move a whole lot, there was still like a net long, right? And I tend not to give too much into volume, but it's always good to have some kind of volume measure. What I really like to do to save space on my actual layouts is I like to grab my volume, my OBV, and just drop it below my RSI. And all it takes is clicking, dragging, and moving it on. And so we can better view the RSI, we're going to go into style and really make that line more prominent. Now we can see the relationship between the on-balance volume and the RSI. Hence, if one was even trying to look for a divergence, well, RSI was divergent from OBV and from price, where we see that lower high on RSI, a higher high on volume, make this in green, and a higher high on price. Right, and that's why I try not to give too much in the volume, because there's a divergence between these two, between volume and RSI peak, and between price and RSI peak based on the previous peak. Alright, you guys that attended the moving average workshop, let's put some MAs on the chart. I'm only going to take 2 moving averages to apply to this template. So, guys, give me a moving average combo that you guys have messed around with and that you're confident with on BTC. You're going to go 9 and a 50. Just a second, guys. So once you guys are, open up the settings on a moving average, you're going to have the length, which is going to represent the time period on it, and then style. So let's make the 9 in red and really make it bolder. And then we'll do the 50 and so light blue. And input, we're going to do that as a 50. And there we go. Alright, so now we essentially got two trading strategies on one chart. If we're looking for moving average crossovers and we're looking for divergences. Alright, and when it comes to setting up a template, a trading template, one wants we're setting up this template to essentially find two signals that agree with each other, hence what's called a confirmation, right? So we want to see where confirmation exists before making a trade, whether a long or a short. So if we see a moving average crossover to the downside, right, which is this one over here, are we going to open a short here? Well, let's go back and look at RSI. Was there a clear divergence before then? There wasn't, right? But what this strategy is letting us know is that, hey, this is not, something's not looking right, because we've got a moving average cross to the downside, right? And we don't have a divergence before then, right? We had a high, and then a higher high with the same RSI, and then even a higher peak. So that cleared a divergence out of here, essentially negating it. And we never even entered oversold. There was no bull div, no bear div. We're getting an MA cross. So what's really going on? Well, we're gonna break to the downside at some point, but one would actually want to wait for the next divergence. I'll make myself smaller so you guys can see a little better. So one would want to wait for the next divergence, and that one would be present here, right? The same one I highlighted earlier. And this bearish fake out was followed by a bearish divergence, where we've got a higher high on the price and a lower high on the RSI. Make this one red, right? And then into a break to the downside, right? So upon this moving average crossover to the downside, this would be the short sell. This moving average cross to the downside would confirm this bearish div, and now we experience this drop. So one would close their long here at the top on that divergence, and then if they wanted to wait for a short, this would have been the short, right? Or they could short the top, depending how confident one is with their divergence. Is everybody following me up to this point? So merging OBV and MAs, or OBV and RSI, is pretty simple. All you have to do is grab the OBV and drop it. It's just drag and drop. Fairly simple. Alright, so let's clear this out. And then let's start with like an ATX. Alright, so let's go ahead and write a DMI, Directional Movement Index. And the DMI is, we've covered that indicator on its own in its own workshop. if you guys haven't seen that, I'd definitely recommend watching the DMI before even finishing out this lesson. And this one's going to be 3 indicators built into one. I'm going to change my DI positive to a cyan. DI negative, just going to make it a dark red, or we're going to make DI negative a dark red. And the ATX I'm going to make in green. And I'm going to go ahead and change the ATX to histograms. Because it is measuring the actual trend as opposed to DI positive and DI negative are measuring price action. So one thing we do know is that the ATX likes to turn at peaks and troughs, right? Once we get into a peak, which is the high of the ATX, and a trough, that's where the trend tends to reverse. So that could be utilized as one signal, but we'd want to look for a confirmation in order to make it a tradable entry, right? Because just basing a trade right off the ATX on a 4-hour is not going to be sufficient whenever we're trying to be the most efficient traders we can. It's not a strong enough signal. So here we see ATX coming up to a peak and flatlining. Earlier today in the chat, based on this fib level, we did bounce off the 50. I'm gonna go off this swing low right here. That swing high. And we're seeing BTC broke up from the 50 this morning. People like, hey, is it going to come back down to the 50? Say, hey, let's just wait it out, right? What happened to all the traders that bought up here? Everybody that longed after this big candle, they all got liquidated, right? Anybody that FOMO'd into this definitely got liquidated, or they're about to get liquidated. So that's why we don't FOMO, and that's why I always say wait for the test, wait for the retest. This is going to be the retest of the 50, so we're going to see what happens there. One can always add a fib to be able to measure the pullback and measure the price action and see what is really happening here. Back to building strategies. Fibonacci retracement is, I think it's one of the key factors, and anybody that ignores fibs when trading they're bound to get wrecked at some point. So having put up our ATX, right, our DMI, now we've got an ATX. I'm going to go ahead and add the RSI again, so we can add a relative strength index. We can always add a stochastic too, in order to build out this template a little further. So now we see the ATX leveling off, right, going into what's called a price peak, or an ATX peak. I'm going to go ahead and highlight that with a straight line. Right, so that level is 41. And what are we seeing here? What are we looking for? We're looking for a divergence or a failure swing, right? And a divergence is going to be a lower low on a higher low on RSI. But we're not quite there yet on a 4-hour, so we don't have that confirmation to make this trade. One can go in on the assumption that the 50 is going to hold, but we definitely want to see a confirmation, and that's why we're building these strategies that essentially entail more than one indicator on the same template. So let's say we go through 2 or 3 templates today, we'll be able to say, okay, we got a confirmation on template A, we got a confirmation on template B, and we got a confirmation on template C, so this trade's gonna go up. What's going on, Keith? Have you been in since the start, Watchman? Awesome. So, you know, now that we've got two indicators, or yeah, the two indicators down here, let's go ahead and add like a long short indicator, and this one is going to be a Tradingview, sorry, a Conigy special. I think it's a WB. It's on my long short strategy. CM EMA trend lines. So I'm gonna go back. We're gonna start with the CM EMA trend lines, and this one's going to be a type of long short strategy where when we get a price break above the EMA, we're gonna get it's a fairly decent confirmation for a long. When we move into the red, it's going to be a fairly good confirmation for the red, right? But back to where we were, we're going to put our DMI back in, and we're going to bring our RSI back in. I'll re-edit those. And some of these strategies are going to backtest on different time frames. And so we want to make sure they're tested on that time frame that they're most relevant to. Excellent. So right back where we were, except for we added the CM EMA trend bars. Now we're looking for some kind of divergence. One thing we do know about the EMA trend bars is that it's going to have a little bit of a lag, right? Moving averages tend to be a lagging indicator. But that's why the moving average traders, essentially, when they nail their MAs right, they're going in with the least risk, right? And they're not getting out at the top. The divergence trader would have gotten out. Come on. The divergence trader would have gotten off somewhere over here on these two price peaks, and the moving average trader is going to get out on this crossover, right? Right around here. So it's going to be all about where you want to define your edge, how much of that profit you want to keep on every trade, and how much sleep you want to get. So, an edge is going to be the combination of strategies, right? So, an edge, once someone, you know, let's say their strategy is going to be divergences, right? Now, refining your edge and being able to, an edge is going to be a combination of strategies that's going to make every trader more efficient at what they're doing. So with myself, I like the big swings. I really like trading big swings. I like trading momentum in a market because that's going to capture the most value with the least amount of clicks. And you know, like back when we were over here and I said there's a short squeeze coming, you know, this was a massive trade up to here, right? And then this the last breakout that we played, that I also signaled, I soft signaled this one in the chat. This was also a big swing. And then it was getting too expensive to keep our longs open on a perpetual swap, so I closed out, and then the market corrected Monday. You know, it was the week before. Monday we entered this correction. I posted, I said we've got a divergence, we're coming down. So an edge is going to be refining your strategy so it only gets better with time, and it back tests more often, and it's just more and more reliable. Absolutely. Edge is a term used in TITS. I preach that book. I recommend that book to everybody that enters our community. And you know, this strategies are gonna help you develop your edge. Whatever an edge is gonna be somebody's niche, right? So Cypher's edge is what he does behind the scenes and building our databases and finding and putting things, taking things off the charts, putting them in spreadsheets and tailoring strategies that call essentially, and be able to backtest things in a different type of visual format. So that's his edge, and it's really helpful. It's really useful. Somebody else's edge might be an Ichimoku cloud, like Sneaker Boy. That's his edge. That's what he's really good at, and that's what he dedicates his stuff to, and that's where he shines. So that's why I encourage people to test out different indicators and experiment with them, because whatever relates the most to how you're going to perceive and interpret information, and versus how it back tests and how it future tests, is going to be edge. So let's go ahead and just save this template. I don't know if you guys are following me, so we can say save indicator template as, and I'm going to call it workshop template 1. And if you want to save the time interval to 4 hour, we just click on that, and we're going to click save, and we can drop down to that list, and workshop template 1, just put a star next to it. Now it should show up on our screen as workshop template 1. Right here, running an EMA trend bars, a CMI, and an RSI. We'll go ahead and clear this one out. Alright, Watchman, since you're here, why don't you give me an indicator for this next template? Brian, Cypher, go ahead and give me an indicator too. I still don't know who the other 5 are. Vasily. I want to help you guys build these templates and modify them. All right, MACD. It's probably one of my least favorite indicators. So the MACD is also going to be a type of momentum oscillator, right? And looking at the MACD here, moving average, convergence, divergence, we see these higher price peaks, right? And we see these lower peaks, right? So there's a little bit of a divergence between MACD and the actual chart. But the reason I think the MACD is unreliable is because if you're going to go with a MACD cross above the signal for a long, And same thing for short, there would have been so many disasters, right? Where we're getting the close here, where one would like essentially start going short here based on this close, right? But then only for another day later to get to start along at that same price point, only to close it. So it just gives off too many signals as for, you know, the MACD crossing the signal. As for crossing above zero, right, we get a lot of fake outs. This area right here combined with this chop, right? I stayed out of this one from this range. I stayed out of this one completely up until we got to the very end when I saw that short squeeze setting up, and we essentially, you know, started looking for the entries when we broke out of the wedge. Alright, so I started hunting down entries once we broke out of the wedge instead of by looking at the MACD. But then your MACD trader, somebody just using the MACD, you know, this is when I said, hey guys, it's time to go long, right? But then the MACD traders were jumping the gun way too soon. So I wouldn't call it worthless in a sense. I would say use it for divergences instead of the actual crosses, unless you can modify it to and refine it so it becomes an actual edge, instead of looking for those signals that I'm not going to call it a worthless indicator, because I'm sure there's a lot of traders that make quite a bit of money doing it and using it, but it's not something that I'm very that I utilize a lot. Right now, you know, based on this third peak, okay, there's another divergence, but we had a short signal and so on. So there's just too many mixed signals coming into play. It's an over trading indicator. If one was to go by every crossover, every time it crosses above zero, and I can't tell you how many times I get on Tradingview and people are like, oh, but the MACD's primed for a crossover. And I'm like, dude, I've seen the MACD turn around so fast. Right here. Right there. Right? Time and time again, especially on a lot of alts. You know, once again, you know, the MACD would come in handy whenever we see this next div, right? Use it for divergences, don't use it for signals. So we got a higher high on a way lower high on the MACD. Now, if this thing was raging upwards, where our MACD is way above the signal, that would have been a cleaner indication of we're going up. But it's good for divergences in a sense, but I don't think it's as reliable as a lot of other indicators. Here we see another bull div. A nice coil towards zero, right? For the actual breakout to happen. And here we see the exact same opposite. Well, that actually started right here. Bollinger Bands, excellent. Boom, I really like, good suggestion, Cypher. So now we're gonna add, can I scrap the MACD? I start applying Elliot wave patterns when I see them starting to become prominent, right? I don't jump the gun and just Elliot wave everything, because Elliot waves can turn into what's quoted as meme lines, where they don't mean anything. It's like memes, right? So I'll start using Elliot waves whenever I see something moving up in an Elliot wave fashion. Your Elliot wave 1 is going to have, it has to beat the last previous high. So if this was an Elliot wave based on this current time frame, wave 1 has to peak above the previous high, right? So if this was our 0, this would be our 1 because we beat that high. This is not a 2. The 2 is going to be lower, so this would be the 2. So if this was an Elliot wave, and this is where it becomes meme lines, right? Because then, like, I mean, there's various fib levels that coincide with the pullbacks and the extensions of these, right? And by no means am I saying this is what's going to happen. But this pullback is looking like a wave 2. But, you know, Elliot waves, the reason I don't quite use them a whole lot, because 3, 4, and 5 are subjective. We don't know what's going to happen between now and 531, or what the timeline is on this wave. Now, if something does make like 3 good peaks, remember we were using Elliot waves, you know, on these little cycles where we had a 1, 2, 3, 4, 5, and sometimes there is confluence with Elliot waves and sometimes there's not. So I don't really use Elliot wave unless something's shaping up in the form of an Elliot wave. VPVR, I will get into that. The volume profile, I will get into that when we hop into the Tradingview. Real quickly, I'm going to put some Bollinger Bands on here. Actually, let's do that in Tradingview. So let's go ahead and do that in Tradingview. Let's go to XVT. I want the BitMEX chart. There we go. So typically I like using Tradingview to get my sequentials, and this is a Tradingview premium TD sequential. It's a premium feature. It's going to give you these really low support and resistance levels, pivot points, and so on. And if you zoom in, it'll give you that sequential count. If you guys trade 9s, you know, this last 9 should be a turner, so we could see upwards movement. But then these 9s are very subjective based on time frame, so I only like to trade my 9s on a 6, 12-hour, or 1-day chart. And depends if we reach a pivot or not. I'm going to clear this out. We're going to add a VPVR and some Bollinger Bands to see how those 2, 3 standard deviations along with volume profile can give us an entry signal or a suggested support resistance area. That's the TD sequential. Tradingview sequential. I'll add that in at the end. So we're going to start with BB, which is Bollinger Bands. So Bollinger Bands were developed by John Bollinger. He's on Twitter if you guys want to follow him. I think it's just B Bands or something. Just type in John Bollinger. And what they do essentially is they will move the price but 2 standard deviations. I guess they'll issue a channel about 2 standard deviations from the price from the median. And if you go into the setting gearbox over here, we can adjust it. So there's going to be an MA in the middle, and the length is going to be the 20, which is standard. Standard deviations is how wide the bands are. So if you go into a 1 standard deviation, the bands are going to shrink. If you go into 2 standard deviations, they're going to expand. The flat across, pretty much the recognized standard on B bands is going to be 2 standard deviations. Sometimes we get too much friction, so I'll go with a 3. I don't like to sell crypto or to issue a sell signal on friction with a Bollinger Band, because when we enter breakouts, either upside or downside, we're gonna see a lot of friction. So one would sell out of this trade way too soon. But what the Bollinger Band strategy essentially says that once a price breaks above the band, it's gonna turn back around and head back towards the median. And same thing with, that's just where the level is, that the median level of price action is. Once again, same thing with whenever we get a breakout to the downside, where capitulation points are going to be on a 1-day close below the band. Right, but BTC on a Bollinger Band strategy, if you buy the daily close at the band, which would be right here, it might take you a while before you break even. So what I'm going to do next, I'm going to add the VPVR. Yep, visible range. Seriously? Got these drawings on when I was comparing BTC to Ether, and I had Ether on the background showing the correlations. Clear them all. Alright, so we're back to BB and BPVR. So with the volume profile and visible range, what we get is these horizontal volume bars, right? That represent where most of the volume is stacked in these channels. And then so based on that Bollinger Band that we're looking at now on a 1-day chart, we're seeing quite a bit of volume down here. But then if you guys remember when I was yesterday's power hour, I said I'm looking for an entry at 7100, and I don't use the VPVR much, but if we do get to see these continued breakdown to the downside, that's why I don't use VPVR much, because it keeps shifting however you alter your chart. 7100. I'm looking for that entry at 7100. Just go to a 4-hour chart, Bollinger Bands. See what the volume profile looks like. So, you know, once this, if this 8K does break, there's a big volume gap up until 71. So if we're building the strategy, you see all this friction with the lower Bollinger Band, and you know this would essentially trigger a buy, but there's not a whole lot of friction here. Now we do see, based on what we're looking at right now, I'm going to ask you guys what we see at this level. Horizontal line. What's going on here at these two key levels, guys? Especially right here at these two wicks. So I wouldn't quite call it new support, but we're seeing quite a bit of volume that happened in this range, right? And that's going to be reflected on this chart by all this trading that happened in this zone. Right? This volume, I wouldn't call it new. It didn't come in today because we didn't get down here. But based on what had happened in this zone right here after Bitcoin was declared halal a few weeks ago, a month ago, there was quite a bit of volume happening here, and that's what's creating the support. Now, we look at that with combination of friction with that Bollinger Band, right? Where did we see that bounce? This is exactly where we saw that bounce for a trade at that 50% fib. So now we don't even have any momentum oscillators here. We're just looking at price action, standard deviations, and volume profile. If we were to add a Fibonacci retracement, right at that 50% fib. And this is why we're seeing this bounce. Now, this bounce might be stronger than we initially perceived it to be, but we want to see what happens on the second test. The first test we had a bounce, now we're getting a second test, and it looks like it wants to hold. Unless it forms another bear flag, then we're headed back down into the next level, which would be 7,900, which is what I've been looking at for our entry, and that's where there's a little bit more volume. It's towards the bottom of that range, and it's the bottom of the Adam and Eve. So I was looking at various things, and plus, now that we zoom out a little further, the majority of that volume bar comes out to here, right? So it's a much bigger volume profile. It was back in time, especially if there's no price action there. But that volume being back in time, that lets us know what people were perceiving was a good buy for our speculative asset a month ago. And if somebody had bought it a month ago with the speculation that it was going to go up at that price, that price is still valid. Alright, so now that we've got Bollinger Bands, this is actually a pretty nice setup right here. Bollinger Bands plus a VPVR, because as we're getting down to this range, Johnny had a short open. Well, where are we? We're touching the bottom of the band, right? But if we're not going to get a snapback for an upwards rally just yet. Why? Because there's literally it's a volume gap area. Not a whole lot of volume, not a lot of, there's nothing happening between these two lines. Well, Keith, I'm glad, I'm glad I'm able to deliver a value where you're gonna go out there and sign up for TradingView Premium just so you can apply what you're using to make better decisions. That fires me up. Now let's add one more indicator. Let's add one more indicator to the strategy and package it up, right? What do you guys want to see? Do you want to have a momentum oscillator? Do we want maybe like a stochastic? I want you guys to start building these with my guidance. Alright, so let's go ahead and add a stochastic here, because I've done two with the RSI. We could do a stochastic, and we could even add our DMI back in. What about a PSAR, right? Parabolic stop reverse. Let's do that. So, the PSAR is giving us another sell confirmation. A parabolic stop and reverse is good whenever the market is trending and not in a range, right? And a range means we're just range bound between these two prices. Trending means we're in an uptrend or a downtrend. So based on PSAR, it's still a sell. Now, if the next PSAR signal is below the candle, that means it's time to go long based on this strategy. So fractals aren't exactly strategies. Fractals, that indicator. Okay, you've got me confused a little, Watchman. You've got 4 different statements in there. Okay, PSAR is called the parabolic stop and reverse. And essentially, if the dots are below, then the trend is likely to go up, right? If the dots are above, that means we're in a sell. So, if we were long on BTC for this bull trap the other day back to 94, and then we saw that PSAR dot forming at the top, right? And the first drop in price, ignoring the VPVR, right? That lets us know there's quite a bit of downside setting up. But once somebody enters a trade on a 4-hour PSAR, you want to stick to that 4-hour PSAR because that trend is going to look different on a different time frame. So, based on this, VPVR, we could essentially see BTC bottom out at this 50% fib. Because, we're getting several confirmations. If this PSAR, if the next dot's below, it's essentially time to long, and I was off about reaching a 61. I would have been wrong about a 61.8 retracement, and the 50 was the buy. But I said I'm not going to pre-run a 50, I'm going to pre-run a 61.8. now that we've added a stochastic, right, we've been oversold and we're starting to head back up. Stochastic is turned, so we might very likely experience a yellow dot on the bottom here, a PSAR dot on the bottom for a rally at least back to the median, which should put us at 88.7. So I'm gonna go ahead and save this template. Save indicator template. We're gonna call this one workshop 2. The best way to actually name these is whatever is in here. So we're gonna do like Bollinger Bands, VPVR, PSAR, and you can do like dashes or so, just so you know what you're gonna be looking at. And you can always make it a favorite. So now it's easy access. What did I miss? I know you guys talked about an indicator and I said we'll do it on the next one. Okay, awesome. Well, you know, we covered a couple of templates here. You know, I did one with the moving averages. I did one with the this EMA trend bars, right? And essentially, we could put these side by side. If I can get my screen to do that. Right, and we could try to hunt down what's gonna happen next. Floating around the chart there. So now that we're running two different templates side by side, you know, if somebody's got 2 monitors, now you're comparing strategy A with strategy B to see what's really most likely to happen, and we're on 2 different platforms, right? And by doing so, now we're going to get one confirmation from our DMI, another from a regular RSI. We're going to try to get a VPVR confirmation, right? And a stochastic one as well. So the 9s. Okay, awesome. Sequentials. That's what I was missing. I'll go into sequentials right after what I'm saying now. So the reason I like setting up these templates is because we want to be able to, instead of having to build a new template and refine our settings every time, we want to build these things, we want to save them, we want to tuck them away, because whatever chart we're looking at, we can pull it up on Tradingview or Conigy and just click on that favorite tab right here, click on the favorite star, or click on the acronym for it, and then boom, it's up. So we can assess things, look for the signals we like, and be able to make those trading decisions based on that. And that's where Edge comes in, right? Edge is the entire playbook. Now I'm going to clean this up again. I'm going to get rid of the VPVR. I'm just going to clean it all up. And And this is how fast we can get it back, right? Just how fast we can get it all back. That's funny. So let's go ahead and go back to, I'm getting pretty close to that, Watchman. This one's pretty inclusive. So on the sequentials, this is only a premium indicator, right? And the one with the 6,000 likes, 600, is probably going to be the one that's mostly utilized. And I don't go off of it 90% of the time. I just like to use it towards the bottom of a range. And I'm not the best sequentials trader, but I'll look for a secondary type of confirmation from it. Sequentials essentially dictate that you only trade nines. Anything that's not a 9 or a 1 is essentially chop, right? So as long as we see, so here we got the 1, 2, 3, 4, 5, 6, 7, 8, and the 9. Here we should see a green 1 right up top at some point, 4 and 9 candles up. And it's going to change on time frame. It's not always the most relevant, but it does give us these pivot points of, so kind of going back in time and looking at this area, we had a green 9 finish here, and then we had an open above that pivot point for a long, right? And that trend went up to a 6, trended back down, up, and then the 9 down here was a 9 for a short, right? Where it's below that pivot point, and we're coming back down, only for another attempted breach. So I don't go off 9s very often. I try to find a bottom 9. So if my last 9 is at a 50% fib or a 61.8, that's a highly likely reversal point, and we're still above that last pivot where that VPVR came in. You guys remember where that VPVR came in? And the Bollinger Band. So let's go ahead and put those back on. We're at the bottom of the band. We're still above that pivot. You see that pivot? And it's right above that volume bar. So a 9 is supposed to be a turn. The pivot points we're looking at is these green dots and these red dots. So a close below a red, right, is going to be an indication of a short. And a close above the green is going to be a good long. So yeah, these indicators aren't going to tell you what's going to happen. They're going to tell you the key levels you're supposed to be looking at. Now, to try to figure out what's going to happen here, we're probably going to have to hop off this big time frame and dive in a little deeper, right? So hey, like George, you're live. Let us know what you think's going to happen. So based off this 30, do we see any reversal type of formation? Do you see a wedge? What's going to happen at the pivot point is going to be up to, bar patterns, chart patterns to to tell us, you know, whether we see a diamond bottom or some kind of wedge. You know, this was definitely a wedge break. And it's a really shiesty one, so I don't even like to call this a wedge. And you know, RSI didn't even pull back into that oversold range. We did have a divergence here. You know, it's still kind of choppy. I want the market to tell me, you know, where it's gonna turn instead of me try to predict. But you know, based on what we just covered today in this workshop, we can assess why the bounce happened where it happened. We had friction with the band. We had a 50% retracement. We had this visible profile, visible range, and we had an ATX peak. And that's what all contributes to edge. And this is what I wanted to get you guys out of the workshop, is being able to build these strategy templates, save them, so we can assess things on the go. So when I say predict but trade reactively, right? Predicting is putting up a fib line. So predicting is what I did on Monday. What's behind this screen? All right, nothing. This divergence lets us know that we're coming down, right? Trade reactively means react to what the chart is doing, not jump ahead, right? Not essentially, you definitely want to trade reactively, and you want to be predictive with your TA, because one, we will be able to foresee what's going to happen, but trading reactively means, you know, not being the first one in, waiting for the retest, waiting to see what happens. Trading reactively doesn't mean buy the stop. We don't want to buy the top. It means waiting for the second test and the third test. Predicting that wedge, right? We don't enter a wedge until we get a retest of a wedge, whether it's a rising or a falling, because we can see a divergence, but the chart keeps going up. We've seen that time and time again. So we don't short the top upon profit taking, wait for that moving average close. We're reacting. Yes, absolutely. Could you add DMI to this one and help look through that real quick? I'm not reading DMI properly still. So let's add a DMI. Johnny, have you been through the DMI workshop? I would go through it again, right? Just because it's a really intense indicator with a lot going on. I don't like assessing a DMI on a short term, but we'll go ahead and go through that, right? So like a 4-hour. The reason I was using the DMI earlier is because I was looking for peaks and troughs on an ATX. DI plus, DI minus help us somewhat determine the buying and selling momentum in the market. Let's go with yellow and dark as fuck. So ATX like to turn at peaks and troughs. So looking at the 4-hour chart, we are an ATX peak. So if that ATX was to keep leveling out, right? If I kept leveling out and we see the price really start an upwards rally, right? And in the ATX, let me see if I can draw a curve. Mark. If you see the ATX start doing something like this, where it's coming down with the price going up, that lets us know that on this entire way down, right, on the ATX's way down, the price is likely to rally up until ATX either goes flat or enters a trough. But go back into the ATX workshop, DMI workshop. It's a pretty good one. It's really comprehensive. I dove only into the DMI. Well, guys, any more questions about things I covered in this workshop? Either a naive question or a useful. What strategy would you put together to micro trade, as you call the day trade, range trade, high leverage? Small movement over a few hours, just a description, not a demo. I've got one of those set up on Conigy and it needs a little refining. And it's essentially a combination of RSI, stochastic, and DMI. And whenever we're doing micro trades, it's all about time frame, right? So if we place a trade on a 30-minute time frame, it's going to take a few candles for that trade to play out. If we place it on a 5-minute time frame, it's going to take more, or it's going to take less time, but more candles. So more 5-minute candles for it to play out. But we want to, before we do that, first we want to make sure, before you get into like micro trading, like those micro day trades on high leverage, you want to make sure you're in an uptrend because you don't want the trade to go against you if you're long. You want to make sure in a downtrend if you don't want the trade to go against you when you're short. You want to identify a range for one. So we want to look for a trading range. I'm just going to go ahead and slap one. Let's go on a 5-minute right now. So now what are we at? We are actually at we're in a downtrend, we're in a correction, right? That's based on ATX is approaching its end of the correction based on where the ATX is, based on everything we just discovered, right? So moving on, we want to identify a tradable range on our time frame. So if we're using a 10-minute time frame, a range is identified by 3 touches. Alright, so here we had a touch, another touch, an upwards breakout down for a test, and we settled above the range. And the top of the range is going to be right here. Now that we've defined our range, you got one touch, right? Close below, break above. So 1, 2, 3, 4, 5 touches. So we can safely assume we're in a range. And if we were to try to high leverage trade it, you would want to make sure your DI plus is at a crossover point, is starting to turn, right? You want to make sure your RSI is at a divergence point where it is got a bullish div off the previous low. So this would be entry 1. This bear div would be the close. You know, you'd want to hold it up until we see this turn on a lower RSI for another short. Back down. Well, now we see the RSI flat line, so a hidden bullish div from here to here. Right? Into a failure swing, so this would have been the next open, waiting to close it up here. I guess that was a demo. Now this is going to be the highest risk type of trading you can do versus, you know, like a 25x leverage on a big swing. Thank you guys. Thanks for tuning into this workshop. I hope I covered a lot of your questions. This thing's going to be cataloged, so you guys can come back and watch it time and time again. I think there's a lot of valuable information that we packaged up. Awesome. Well, thank you, Johnny, Watchman. Thank you guys for being with us. Thanks for being engaging. I'm glad you guys are making gains. I'm glad you guys are as active as you are. I'll be in the chat, and I'd expect a rally at some point. Awesome. Thank you. Thanks, Watchman. Thanks, Johnny, and everybody else in the chat. Hope you guys enjoyed it. Yeah. Catch you guys in the next one.